Welcome at forextrading.com. Let's take a look at another trade example. We are talking about gold at 4-hour chart, and the date is 8th of February. That's what we are talking about. This date was the entrance of the real account transaction. So first, let's take a look at the big trend at the gold instrument. We are talking about big growing trend right now, and we've seen a beautiful dome coming in at the market, and the demand was stopped out by the another sellers coming in at the market, and the retracement wave was continued for a few days until it met important support resistance, and it broke out, but it came back to important support resistance level. And we've seen this blue rectangle as a beautiful consolidation pattern, and the market turned into the upside. Looking at 4-hour chart, we see this turn to the upside was made after head and shoulders pattern. So we see here left shoulder, right shoulders, and we see here a head that made a fake breakout. So this support resistance line was very important, and it was tested a few times before the market moved to the upside, made a continuation rectangle pattern, and really, as far as I'm concerned, we could enter the market somewhere around here. Only I was waiting for some continuation movement, some confirmation of those buyers coming in at the market. And this rectangle was continuing the uptrend movement, where I entered the market just above this breakout zone. So we are talking about entering the market just right here. And the trade is still on. We are talking about possible target of almost 406, more than 600 pips, and maybe more when the gold will come back to its biggest trend. We'll be seeing another serious growth, maybe some aggressive dramatic movement to the upside. So right now, looking at this 4-hour chart, we see after small breath we took some kind of retracement, but the market came back fast. So at first I was having this stop loss turn on right here, just below support of resistance of this pattern. And after market moved to the upside, I moved this stop loss at the break-even point. But seeing that market is going down, but it's not an aggressive move, so we are talking about some people taking the profit from this growing trend wave, and no sellers, no strong sellers coming in at the market. I've told to myself that we might take a bigger risk, move the stop loss to the lower points of support resistance in order not to be stopped out with this small retracement when we see no important sellers coming in the market. And look what happened here. We got 1, 2, 3, 4, 5, 6 red candles, and one green candle was strong enough to take out those 5, 6 red candles. So we are talking about 5 to 6 times more stronger movement from the sellers coming in. We got much stronger buyers at the market right now, and the market didn't follow through to the upside from this support resistance breakout zone, but we might see it in the future. So right now I've took the bigger risk to save this trade, to let it run according to this trend from head and shoulders pattern. I think we might see at least few hundred pips movement from this head and shoulders pattern that makes signal for few hundred pips movement at least. But right now, if the market's gonna turn back one more time to my entrance zone, I might move my stop loss another time to break-even point and let it close if the market's gonna go down to this level again, because it has been testing this level once and it is enough for me. I mean, the market should be following through to the upside right now. I mean, today and next day, maybe. I don't want to see market going down again to this level when I enter the market. So if the market will turn back, most likely I will close this position at break-even point and forget about it for next few days to few hours to few days. We'll see what will happen next then. So right now we are talking about entrance the market here. If somebody didn't make it, we will have another opportunity to enter the market somewhere around here when it's gonna break out to the upside from those support resistance level. I mean, this pattern will be broke out to the upside. We might be coming in the market again. So I'm talking here about the first part of the market entrance. This is a medium or long-term market entrance. So we are talking about big moves that will be seen at daily chart, and maybe market will continue this kind of movement in the near and more far future. So this kind of the trade is a more advanced example from the others, because I'm trying to show you how we can fix our stop loss according to the situation at the market. So it's not always that stop loss stay at some particular point or we're gonna move it with the market to break even point. Not always. Sometimes we will give the chance to transaction to run, but we won't give those chances as many times as the market wants. It can happen, for example, once like it happened here. So we'll see if the market will test this level when I enter the market, or will follow through with those buyers that came in this beautiful green candle. So I'm talking about recent candle, recent move. So in next examples of the trades, more advanced trades, I will try to tell more about taking a profit from the market. What kind of behavior we do expect when the market meets important support resistance. The first point, first zone, like we are talking about this beautiful shell right here and this rectangle, blue one, and the next support resistance at the market that might be met at some future time. So we're gonna discuss that. So thank you very much for watching. This time it would be it for now. I hope to see you more often at daily video analysis. Thank you very much.